But what will it be like going forward, given that we've seen a lot of volatility over the last few days? First up, Nirmal Jain of IIFL with us. Nirmal, afternoon. Do you think this round of volatility will extend for a few more days, or do you think it's beginning to ebb?
I think maybe not few days, but for next few months or at least a year, we'll see volatile bouts in the market. I mean, there'll be phases when sudden event will trigger some sort of volatility. Primarily because as we are seeing the numbers and as we are seeing the news, Europe in particular is not out of the woods. There'll be more and more negative things will keep coming up from unexpected quarters. We won't know what is happening where. And in this kind of scenario, those events will affect Indian markets. But at the same time, I must add that unlike what happened in Lehman crisis or in 2006, Indian markets are not going to see the kind of crashes or will not basically see such significant impact as it had seen, say, 2 years ago. Primarily for 2-3 reasons. One, there's a realization that Indian growth story will remain intact because 2 years ago, some of the foreigners were fearing that India will also get into negative growth or no growth time period kind of a thing. But that now I think more or less everybody is convinced will not happen. Number two, in Indian context, the fiscal deficit is more serviced by domestic debt, which is not the scenario in the US or Europe. They have their deficit which is being funded by international debt. So that way India is relatively safe. And thirdly, insurance companies have more and more funds. And if you see last year's numbers of FI outflow and insurance companies investment, then we have another set of institutions that have large money that can be invested in stock market. And whenever there's an opportunity, valuations are attractive, they step in and they give the cushion to absorb FI selling. All these things put together, I think that every dip is an opportunity for a long-term investor. Valuations now are reasonable and more or less, from a longer-term perspective. But having said that, as I said, that next few months we'll continue to expect a volatile market which will consolidate. I don't think that this is a market where one can take a call and say that market will have a steady rally or a steady fall.
What, to your mind, could be the extent of downside, Nirmal? I mean, even for investors who are looking to buy right now, they would at least have to want the market to be anchored at certain kind of levels. Do you think 15,500 is the maximum level of downside one can see, even in the case of global volatility?
I think market is always a game of probabilities. So there's a very high probability that market will find support at that level or equivalent of Nifty 4770 from where it bounced back earlier. But there is small probability that market may go down and find support at 4,550 if there's a negative event which we can't anticipate today. But my intuition is that from those levels, market will again bounce back. So those will be attractive opportunities for investors to step in, those who are sitting on money. So probability that market will breach 4,770 is not very high, and 4,550 is still very, very limited.
So you don't see a big fall or a major correction which drags the Nifty down to 4,000, 4,200 kind of levels. That is very unlikely in your eyes.
Yeah. That is, in my opinion, is very unlikely, and primarily because of the factors just I mentioned that the macro fundamentals are strong, and global investors also realize that India is different because they've seen it in last 3-4 years of crisis elsewhere.
Okay. Nirmal, the problem has been the relentless FI selling. What do you pick up from your institutional desk? I mean, we've seen $1.6 billion of selling in 7 days. Do you see that continuing if this global or European volatility persists?
That has been triggered primarily by the news flow from the European economies. I mean, particularly as all of us have seen Greece and what happened in Spain. But if you really look at it, $1.6 billion for a market as big as India is not very large. It's not something that indicates a kind of a panic. I mean, that is something which is with the kind of events and kind of news that we had was expected. And I think as things settle down elsewhere, as the dust settles, we'll see that that kind of selling tapers off, and there may be some the long only funds probably would look at opportunities to buy as well. It's very difficult to predict on a week-to-week basis that how the fund flow will be on FI front. But if you look at other things like in MSCI index, our weightage now has gone up as Israel has moved out. So whenever things calm down a little bit, you'll see my personal assessment would be that FI money should flow in more.
What about some of the global cyclicals like metals? I mean, they have got beaten down completely. 25% in 1 month, the metal index is down. Do you see this as a buying opportunity, or would you stay away from that area?
I would personally stay away from commodities and stocks which are dependent more on global cycles, and particularly all commodities would be driven by global commodity prices. And even commodity like cement, where we are not so much dependent on global prices, there's overcapacity is being built. So in terms of building a portfolio in today's environment, I think I would advise that be away from cyclicals and commodities, and maybe look at more sectors like technology, IT, pharma, and then FMCG, select mid-cap companies in these sectors, as well as infrastructure, and build a portfolio from these kind of sectors.
And what kind of an upside do you see in the near term, Nirmal? Because we've made several journeys to that 5300 zone, but the market is not sticking there. How much longer do you see that being a roof over the market's head? Oh, unfortunately, the audio link seemed to have snapped. We will get back on that. But Nirmal, link snapped. I was asking you how much upside you see in the near term. How long do you see that 5300 top being in place?
I think that in near term, I don't see much upside, because given the way a global scenario is today, we'll continue to get negative surprises from all over. And market will keep consolidating. So I think market will find strong resistance to cross 5,050 and to cross 5,200 or 5,300. I think that at least in the foreseeable future, 6 to 12 months, it seems unlikely.
How do you see the primary market panning out now? Because JP Infra has not listed well, and we've got an ITR from StanChart open at this point in a volatile market condition. How do you see these faring?
I think there is appetite for primary market if they are priced well. So the entire, maybe to that extent, they are not so much linked to secondary market. If you price well, then there's enough appetite domestically as well as internationally for new issues and new IPOs. But the challenge is that most of the entrepreneurs, most of the promoters, as well as government departments, when they bring out issues, they try to aggressively price the issue. They try to get bankers to bid and just try and get with the highest bidder. And that kind of approach probably will not be good, because that might leave particularly small investors with bitter taste if they subscribe into IPO and they say that IPO is not opened, or it opens at a discount and they are at a loss as soon as stock starts trading. I think, and therefore I would say that IPO market, in fact, there's huge appetite. There are a large number of investors who don't want to take pricing and timing decisions, so they don't get into secondary market directly, and they have savings and they understand equity market. They can bring that money, provided IPOs are priced attractively. Given the volatility in the market, they should leave at least 15 to 20% cushion. I think that approach will work.
Thanks, Nirmal.